Alright, good day everyone. This is DBS Annual Report 2023, which was released in March 2024. Alright, so just bear in mind that everything we discuss is as of March 2024, but the date of this recording is 15 December 2024. Right, the reason why I'm going through this annual report is because it's the latest one from DBS and I'm trying to study the banks. Right, so these are the key points from the letter from the chairman and the CEO. I only extracted the parts that were more relevant for discussion, right? So the global economy averted a hard landing in 2023 after hiking interest rates 7 times in 2022. The Federal Reserve, in a bid to combat highest inflation in generations, raised short-term borrowing costs by another 4 times to 5.25 to 5.5%, the highest level in 22 years. Central banks around the world followed suit. Elevated interest rates dampened consumer and investment demand and stymied global trade. US-China tensions, the ongoing Russia-Ukraine war, as well as the Israel-Hamas conflict added to the uncertainty. DBS key markets are in Hong Kong and Singapore. Being small open economies, were impacted by slowing external demand. Singapore's economy grew by 1.1% in 2023, down from 3.8% the year before, so it's quite bad. Right, Hong Kong economy did better, with advanced estimates indicating it expanded by 3.2%, which is quite impressive, right, though this was weaker than expected. Against this backdrop, we delivered a solid financial performance with net profit and return on equity at record highs. In a year marked by turbulent in US regional banking, right, I believe that at least 2 banks in the US regional banks had to shut down. Right, one of them, the more famous one being Silicon Valley Bank, right, and the failure of Credit Suisse, which was absorbed by DBS, right. We were named the safest bank in Asia for 15 consecutive years, right. So that's a good thing, right. So this is where all their record numbers come in. They deliver a record total income of 20.2 billion. This is the first time that in the bank's history that they have crossed the 20 billion mark, right. As well as net profit rose 26%. To an all-time high, again all-time high of 10.3 billion. Return on equity is at 18%, again all-time high, right? So there are 3 all-time highs here: total income, net profit, as well as return on equity, right? So very impressive figures from 2023, right? Earnings were propelled by tailwinds from a rising interest rate environment, right? So this thing over here actually favored them, with net interest margin expanding 40 basis points to 2.15%, right? So what is net interest margin? Is basically the difference between the money that they borrow at and then they lend out. So for example, they borrow from us, right, you and me, right, at 1% interest rate. So they pay us 1%, but they take this money to lend to someone else at 3.15%, right? So the difference between 3.15% and 1% is 2.15%, which is what their net interest margin is, right? So they are saying in the past is lower, now it's 2.15% because of these higher interest rates. Non-interest income also recovered strongly, boosted by wealth management fees, card fees, and loan-related fees. Right? They say that their performance is not just a reflection of the macroeconomic environment. So it's not just these things that make their results good. It's also what they did internally, structural shifts. Right, so they are focused on digitalization, cash management, and wealth management, broaden their low-cost deposit base. Right, so they are saying that they managed to keep their cost of money low because of all these reasons. Right, and also other things like the private banking side has become one of the top 3 in Asia, as compared to in 2010 when they were outside top 20. So they went from outside top 20 in 2010 to top 3 in Asia in 2023, right? So 13 years time, right? So that's quite impressive. Okay, treasury market shifted from being a business that relied mostly on proprietary trading to being primarily a customer-focused business, right? So I do think that customer-focused business is better than trading. Trading is a bit hit and miss, right? So yeah, asset quality remains resilient. Right, consumer banking, wealth management side also did well. Total income up 35% to a record 8.96 billion. Right, they remain the market leader in deposits and mortgages. Right, there's an improving investment climate that encourage more customers to convert their deposits into investments. Wealth management AUM also increased by 23% to 365 billion. Institutional banking also saw income rise 22%, right? They were boosted by a sharp rise in cash management income. The only downside is income from treasury markets fell by 38%, okay, due to higher funding costs, right? So even with a slowing China, Asia's structural growth story is very much intact, right? There's a large growing middle class, increasing number of wealthy people, and massive infrastructure needs, right? They have reached an inflection point in India and Taiwan in terms of scale. In India, they have more than 520 branches, right? Outside Singapore, we have the most complete platform in India. Alright, so they have tried to increase the market penetration of personal loan, gold loan, small business loan, and insurance. Overall, their India customer base has grown 18%, while income and net profit has rose by 15% and 30% respectively. Right, they also completed the Citibank's customer acquisition business in Taiwan. Right, with that, they are now Taiwan's largest foreign bank by assets. Right, so the growth has been accelerated by 10 years. Annual revenue is propelled past the 1.3 billion mark. Number of banking customers in Taiwan has more than doubled to about 1.1 million. Right, they have the clear market leadership in loans, deposits, cards, and investments among foreign players in the market. Right, they have this China plus one strategy, which is China and the I think it's ASEAN countries, right? I'm not sure if it's ASEAN or it's Asia, but basically the countries around China, right? They also continue to make headway in the Greater Bay Area, which I think is the best prospect in China. This area has the best prospects in China, right? So it's a good thing for them to grow there. They also upped their stake in this Shenzhen Rural Commercial Bank from 13% to 16.6%. I believe this one is in the Greater Bay Area. Right, so these are all their record numbers which we discussed slightly earlier. Right, this one, the dividend and the 1-for-1 bonus issue was as of earlier this year. So I think it was April or something. Alright, I can't really remember, but I did a video in February 2024 to discuss this. So I'll leave a link in the description below if you're interested. Right, so they talk about AI, right, how it helps to avoid scams and fraud. They have digital disruptions, right? So I think the banking, I think the app stopped working sometime this year, last year, sorry. And what happened was the CEO and the other members of management, the group management committee, actually took a pay cut, right? Because of this, right? I think it's a very good thing because at least the leaders are taking responsibility for what's going on in the bank. Right, barring unforeseen circumstances, the dividend going forward should be able to sustain at the current level, right? And the ROE should be in the range of 15 to 17%. So you can see 18% is really very high, right? They don't even expect to maintain 18%. So if I take the middle of this range, they probably expect their return on equity to be around 16% moving forward. Right, so these are the larger ideas, right? I think I won't go through because we talked about it. Taiwan, Greater Bay Area, right? Lending, market leader across deposits and mortgages. We talked about this already. India, we talked about it, right? This one is for this is for the ultra high net worth individuals, right? They are launching the world's first bank-backed multi-family office that leverages Singapore's variable capital company structure, right? So it offers clients the option of managing their wealth in Singapore without the need to establish a single family office. I think so it makes it more easy for rich people to come to Singapore to do things, right? Which is, I guess it's a good thing, right? So anyway, this is the return on equity graph as compared to their peers OCBC and UOB. So you can see that in the past, right, it's more or less quite close, right? But the gap started to open up since 2020, right? You can see that DBS since around 2018 has always been higher than its two peers, right? And the gap looks like it's widening, right? So the two peers are OCBC and UOB. 18% is very good because if you look at OCBC, I think, if I'm not mistaken, don't quote me on this, but if I'm not mistaken, the OCBC CEO actually got a question on how come their return on equity is 14%, which is lower than DBS. And according to the CEO of OCBC, they said that they are more conservative and therefore they do not have any intent to try to surpass DBS return on equity. Right, so basically, the odds of this thing, both for the SG peers staying around 14% is relatively high, right? And DBS is likely to hold an edge over them because they estimate to be 16%, right, from the previous slide. Right, so this is Gupta, sorry if I pronounce his name wrong. Right, so they said two principal factors behind their outperformance. Right, firstly is their focus on Asia. Right, I think I won't really say too much about this. Right, so China, Indonesia, Asia, and Taiwan, they're growing there. Then the second part is digital transformation. Right, so they say that there's tangible outcomes of 370 million in 2023. Right, from the AI side. Yeah, so you can see that Gen AI, they use it to process unstructured data, right? So help them process information. Okay, I'm not going to talk about these routine tasks. I think nothing much to say. Yeah, this type of thing are very standard. I don't think it's that big of a deal. But I think more importantly here, Gen AI is talking about the fact that they are reducing time to do the very mundane tasks, right? For example, filling up reports and maybe forms, right? So they use Gen AI to do this now, so it's a lot easier. I think this is expected lah. Alright, so then they have DBS GPT, which is the employee-facing version of ChatGPT to help them with content generation and writing tasks in a secure environment. Right, they're also developing enterprise knowledge base, which will give our employees the ability to search and synthesize unstructured information for various tasks. Right, so all these things will actually replace the very mundane jobs, right? And I think in the long run, it should help to drop the manpower requirements in any organization, not just DBS. Right, this one I don't think I talked about it. The CFO, yeah, so they talked about the fact that, yeah, the numbers we've talked about, so I'll just skip over. Right, cost to income ratio has improved to 39%. ROE is very high, 18%. Yeah, so what they say here is the ROE was 6 percentage points above 2006, where the Fed's rates were last above 5%, right? So they're saying that our performance, right, is not just because the Fed rates are above 5%, right? Because in 2026, right, the Fed rate was also above 5%, but they didn't achieve this high ROI of 18%. In fact, ROE of 18%. In fact, the ROE then was, I think, something like 12%. Right, so they say similar conditions between 2006 and now. However, our performance is much better now because of the things that we have done inherently in the bank. Right, so they say that, what their digital transformation, how has it boosted ROE? It has strengthened their CASA, right? So current and saving accounts franchise, that means to say that this is the cheapest way that the bank can borrow money. So like I said earlier, their net interest margin is basically the amount, the interest rate at which they pay the depositors, for example, you and me, for borrowing our money at 1%, for example. Right, so this is the best money to get, because like let's say you borrow from another bank, the other bank will charge you much higher than 1%, maybe 2 or 3%, depending on whatever. I think maybe above 3%. Right, so there's no point borrowing money from another bank to lend to someone else. Rather, I want to borrow money from people like you and me from our CASA, right? So this is the best way to borrow money for a bank. And if you have a lot of CASA, which DBS is claiming that its CASA has improved by a lot, right? Increased by 60% since 2020 to 2021. Right, and more than half of this increase was in foreign currencies, which helped them to make foreign loans. Right, so increasing CASA is always a good thing for them. Despite the CASA outflows in 2022 due to rising interest rates, because interest rates get higher, right? So people take money out from the CASA and put in things that yield higher interest rate, for example, bonds and so on and so forth. Right, so the CASA rates at end 2023 were still higher than end 2019, which was before this 2020 era. Right, so our SGD and foreign currency ratios stood at 86% and 35% in 2023 as compared to 69% and 21% in 2006. Right, so both numbers are higher. right, in 2023. Yeah, so they say that technology and data enable us to gain wallet share and fee income from better customer targeting and engagement. So they can target the customer better with the products that they are trying to market. Alright, so fee income has compounded annual growth rate of 6%, faster than its peers. Right, stronger recovery in wealth management following industry-wide decline in 2022 when net interest rates rose and geopolitical tensions flared. Right, new money inflows, which has more than doubled in 2022 as compared to the preceding years, were sustained at 2023 at 24 billion. Right, as risk appetite returns. Alright, so customers use their cash under management to invest, boosting fee income growth. Right, finally, thirdly, they say that credit costs are lowered because they use data analytics and artificial intelligence for early warning and portfolio management. Right, so up till 2018, our credit costs tend to be above peer average. Since then, they have been consistently lower. So they are using this to manage their costs. Right, so they say that the improvements have been masked by low interest rates but became apparent in 2022 and more fully in 2023, which explains our performance as interest rates rose. Right, this is why I will talk about it. The Taiwan and India has been discussed. Right, so they say here that we believe this initiative will enable us to sustain medium-term ROE, right, in the short term or medium term at 15 to 70% after assuming more normalized interest rate and credit conditions. Right, so they say that they expect this number to be more or less sustainable in the medium term. Right, I don't think I'll talk about this. Yeah, don't talk about this as well. Right, so the digitalization aspect of their transformation, they say that digital customers generate 3 times the income on average than traditional ones. Right, so obviously digital customers are better. Right, so the expansion of digitalization efforts in recent years to wealth management, transaction services, and treasury customer sales. Right, and the percentage of group income from these high ROE segments have rose from 40% in 2017 to 46% in 2022 and further increased to 52% in 2023. So these parts of their income are higher return on equity. Right, that means you need to put in less money to get money back, which is clearly a good thing. So these are the high ROE segments that have contributed more and more to their income. Yeah, so they aim to be the primary bank for increasing number of wealth and business clients. Right, so these are their growth countries: India, Indonesia, China, Taiwan. Right, since 2017, the cumulative growth from the 4 growth markets, right, amounted to about 8 million customers. During the same period, total income grew 84%. Net profits have surged by 5 times. Right. So you can see, this is how their net interest income comes in from consumer and wealth management, institutional banking, others, and treasury markets. So you can see this year, this up by 2 billion. Right. Why this is the 2022 results 4.27. Yeah, 4.27 billion, right? So it becomes 6.2 billion, right? So around 2 billion improvement roughly, right? Institutional banking is up 1.5 billion. Others is less. It has gone up by a smaller degree so I didn't bother too much. Treasury market is the only thing that is negative, right? But this part is put up by this other non-interest income, right? So you can see that the main drivers are these two right, followed by others. Okay, not going to talk so much about the numbers here. Right, so net interest income, you can see that it's roughly all-time high, both from commercial book and group. You can see that the trend is here. This is first quarter to fourth quarter, 2022 to 2023. The peak is somewhere at third quarter 2023. Right, it looks like it's coming down. Right, so yeah, I'm not going to talk about this as well. Yeah, I don't think this is so important. Yeah, this one they're just talking about the costs. But the cost per income ratio is going down, right? Even though the absolute cost is going up, as you would expect, if you are serving more clients, you should expect the cost of operation to be higher. But what's important is the cost to income ratio is dropping, right? So asset quality, nothing much to say. Yeah, so this is the rough trend of what's going on, right? The income, pretty nice trend, right? This is the highest ever, like mentioned before, over the past 5 years, right? Cost to income ratio is again getting better and better. Hopefully 40% is not their limit, right? With AI, they should be able to improve this further, and also digitalization, as they talk so much about, right? This non-performing assets, right? Going down is good. Yeah, return on equity, you can see that the long-term average is not this high at 18, right? But you can see that what they are claiming is that the recent years they have done things to think that they can sustain between 15 and 17%, which means average 16%. So the long-term, not long-term, but the medium-term return on equity should be roughly here, around 15 to 17%, right? Yeah, so this is the risk part, right? I don't think the risk part is so, there's so many things to say. Yeah, they just talked about the fact that there's not much unsecured customer credit, less than 2% of the portfolio. Yeah, they are just saying that, they are quite responsive, right? For example, the failure in the banks in US, right? So what happened with this Silicon Valley Bank was, right? I'll just give you a short summary. Basically, what happened was they take deposits, right? So they pay 1% on these deposits that they take in. So they try to make money. So they take these deposits and they buy 10-year bonds from the US government, I believe. When they buy these 10-year bonds, they get maybe 1.5% interest rates. But when the interest rates went up so sharply in 2022 and 2023, right? These long-term interest rates also went up, right? So the value of the bonds that they hold at when they bought for 1.5%, right, start to drop, so that the interest rate on these bonds that they bought can go up to match the new high interest rate. So essentially what happened to them was that they didn't have the money to pay out when the depositors asked for their money back, and it happened in a very sad manner, in the sense that people just spread rumors that this bank got issues paying out their deposits, because on the book, right, their value of the assets have been depreciated due to the change in interest rates, right? So when this happened, right, everybody went to the bank to ask for money, which is exactly when a bank is going to fail, because the money has they used to buy long-term 10-year bonds, which they only get back in 10 years time, and if they sell now, they have to sell at a loss, because the original interest rate they get 1.5%, right? For this 1.5% bond to offer the high interest rate of 3.5% currently, for example, the value of the bond has to drop. That means they have to sell their bonds at something like 60 cents or 50 cents on the dollar, and that's what caused the bank to fail. If they had been able to tell people that actually your money is safe with us, right, there's no need to panic, right? 10 years later, right, they will have fully recovered, because they will just take back the money after 10 years at the value which they invested in. So for example, if they put in 10 billion, right, if they keep for 10 years, right, they'll take back the 10 billion plus the interest, right? So that's the sad part of Silicon Valley Bank. So they are saying that they did stress test the bank, DBS Bank, right? So this type of thing, unfortunately, right, unless you are a bank specialist which really look at these numbers carefully, I think it's very hard to tell. I'm sure they are around somewhere, right? Anyway, yeah, that's the end of the summary of this annual report 2023. Hope you enjoyed it. Please remember, none of this financial advice, and I may make mistakes. Please do your own due diligence before making an investment, right? Sorry for the spelling, for the words error here, right? And finally, thank you for listening.